Hello everybody, this is Seth from Brookstone Financial, and it's hard to believe that 2022 is almost to an end. Now we have just over 55 days between now and the end of the year, and one thing that I want to remind everyone of is taking your required minimum distribution before the end of the year, before December 31st. Now there's two classifications where you need to be taking a required minimum distribution. One would be you have reached age 72. So if you have attained age 72, we need to talk about required minimum distributions, help you do the calculation, and make sure it's out of your retirement accounts by December 31st of 2022. The other scenario could be you inherited an IRA or you have a non-spouse or inherited IRA account. Under those situations, you also have to take a required minimum distribution and may need to do so before December 31st. Now, many of our clients have ongoing systematic monthly distributions coming out of their account to help supplement their Social Security and or other retirement income streams. In those cases, we need to do the calculation, make sure we're on the right trajectory so that the cumulative total is enough to meet your required minimum distribution by the end of the year. Now, thankfully, we have a nice little table here, and each of you is entitled to a copy of this table if you'd like to stop by the office, but this is what we use. It's actually provided by the IRS. The calculations here, the divisors are provided by the IRS, and these are free to all Brookstone clients or really anyone in the community that'd like to stop by and have this conversation. Another thing I want to draw your attention to is a rule or an opportunity that's often overlooked related to required minimum distributions. And that rule is called QCD, or that opportunity is called QCD. QCD stands for Qualified Charitable Distribution. And pay close attention to this because it's often overlooked. It's not talked about enough. It only comes into play though when you reach age 72 and you're required to take required minimum distributions. QCD says this. Let's say, for example, you are tithing to your church every year, or you're giving to other 501c3 nonprofits, and you're gifting or tithing that money directly from your checking account. Well, think about it. That's money that you've already paid taxes on, and it doesn't go towards satisfying a required minimum distribution. Under the QCD rule, you can redirect that tithing or those gifts to come directly from your retirement account to that church or to that nonprofit, and it never hits you as taxable income. Now you may be thinking, wait a minute, Seth, but don't I get to deduct those contributions anyway? Well, think about how high the standard deduction is in and of itself. I mean, most don't get to take any more deductions than the standard deduction for either individuals or married couples filing jointly. So again, if you make those tithes or you make those gifts directly from your IRA, now it never passes through your hands, could be from your 401k as well. It doesn't hit you as taxable income, and it also goes to satisfy your required minimum distribution for the year. Folks, this is a true win-win. The only person you're cutting out is your favorite uncle, Uncle Sam. If you want more information about required minimum distributions or how to calculate those distributions, or just make sure that you've taken enough before the end of the year, get with us here at Brookstone Financial. It's 812-288-9000, or you can visit us online at brookstonefinancial.com.